What's going on, traders? Sandra O'Connell here with Pristine Capital, coming at you with yet another market recap video. It's February 18th, 2022, and it is OPEX Friday. Happy Friday, everyone. We made it through another options expiration month. Before we talk about the price action today and my trades for today, a quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. Alrighty, markets today. We had the S&P 500 finish down 0.65%. Granted, let me set the stage. A lot of times when the market has negative momentum heading into OPEX Friday, you can get like an insane falling off a cliff red action in the markets. So even though we did see a lot of red today, I don't see this as like a completely horrible day. To me, it's just like some very volatile action that we're going to put into context. S&P 500 down 0.65%. NASDAQ QQQ down over 1%. IWM small caps down 0.86%. Dow Jones lagging to the downside. These dogs of the Dow down 0.64%. And we had the ARK Innovation ETF really take a beating, down another 4.96%. Here's the positive divergence. So while these all closed in negative territory, and if you were trading this market today, I know you know what I'm talking about, or the market was gyrating all around. There were times when it really looked like we were slipping into the abyss. There were times where the indices clawed back all these losses and they actually went green intraday. And we finished out somewhere in between that. But volatility actually contracted today, and that is a positive divergence when you get the S&P 500 closing down and you also get the VIX closing down. My color on just what I was seeing today is I noticed the VIX was trading in a really tight range, and typically that happens when the VIX just won't break down. That's typically because the market makers are seeing a potential risk event, and they're not going to take volatility down or start offering protection or anything like that until that event is resolved. So yeah, today was challenging day. Market was down. But I think it's really just we have to make it through a lot of this Russia madness and Ukraine madness. We actually had Biden speak to the nation at 4 p.m. It actually ended up being more like 5 p.m. It was about an hour late. But yeah, and during the press conference, I think there were a lot of investment managers as well. This is another key dynamic. For these guys, they have to be long protection now. Because let's say the ish goes down this weekend and all of a sudden something happens. Let's say like war breaks out or whatever. If these guys, they do not have protection on, they're going to lose their jobs. And everyone's going to be like, you knew this was a possibility and you didn't have any puts or like any protection or a hedge. So they can lose their job. So for their career risk management, it's better to just add the protection. If the protection isn't needed and you lose some money on it, who cares? I'm not going to lose my job for that. But if things go bad and I don't have that protection on, I lose money that way, that's where I could lose my job. So yeah, I think there were a lot of people like, why isn't the market going green? What's going on? Why don't we just like trend to the upside? And you have to keep in mind there is a lot of uncertainty that we have on the plate. But that being said, the fact that the VIX closed down I think was a good thing. Breadth was also negative. We had about a third of advancers across all of these indices. And whoa, I just see a headline that popped up. Fed Chair Powell to give semi-annual monetary policy update to House Financial Services Committee on March 2nd at 10 a.m. TBD on that. All right, Finviz heat map. We had a lot of selling hitting these FANG stocks. So you can see NVIDIA, this one's been on a 2-day bender ever since it reported earnings. Tesla was also down as well. So whenever I enter the session and I see Tesla and NVIDIA are down, these were the two big leaders of 2021 and 2020 as well. So when I see those down, I'm like, okay, this is probably a bad day for the growth stocks. And it really was. Take a look at these sectors. The ARK Innovation ETF was down almost 5. The Next Gen Internet, the ARK W, was down over 5. Chinese stocks were down as well. There were some bad headlines. I think this administration hit a few Chinese companies with some sort of status or put them on a list or whatever. So these were down 5.04%. Best performers, we had consumer staples up ever so slightly. And we had the regional banks also up ever so slightly, just 0.18%. So overall, definitely a bloodbath on this sector sheet. Style factors. Best performing style factor was high div, low vol. That is very risk off, and defensives. And then the worst performers were growth, momentum, and high beta. So that is a very risk off configuration. All right, let's take a look. So we talked about this Biden presser. Oh yeah, so the Biden presser came, it was at 5 o'clock. And basically, you know, I think a lot of people were waiting for that. Like, what's going to happen? Are we about to declare war? But basically all that was said was, hey, we have a situation going on. We think that Russia is going to invade Ukraine. There will be consequences if they do that, sanctions, etc. We're all united against them. There's still a chance for Russia to turn to diplomacy. And if they stand down and they don't do this, you know, we can negotiate with them. So that was all that was really said. And to be honest, that's been being said for the past, you know, few days when all these headlines are coming out. And it is a very tough trading environment because basically every 10 minutes we're getting a headline about this situation. Like, they are going to invade. It's happening. No, now it's happening. No, it's happening in 2 days. So it's kind of tough to really like get in like a risk on mindset when you're just seeing like potential invasion like every, you know, 10 minutes. So I know there's a lot of people out there that they're like, I just can't get a feel for what the market is going to do. I can't predict it. And that is perfectly normal. We should not be in like a nice trending market where like there's full certainty on which way the market's going to go when we have some of these huge catalysts ahead of us. So I think it's very important, just keep the perspective. Hey, these fund managers, they're the ones that are moving the markets. Are they really going to lay out like a ton of new risk on the table if they feel there could be like a big, you know, World War III type scenario, or they just don't know what's going on, the VIX is going crazy? It's a tougher environment. So yeah, if you're used to being able to like predict where things are going and whatever, you know, this is obviously going to be a tougher environment. I think the way to solve for that is just carrying a bigger cash balance. So that's what I'm doing. It's good to have the optionality where if things really do slip into the abyss, you can go ahead and, you know, use it as a buying opportunity. All right, S&P 500. Take a look at this pattern that we are forming. Trend model's at a -3. We're below these key moving averages. We did make a run for this monthly value area low here at 4309.75, and we rejected off that level, which is a good thing. So you might look at this and say, hey, we rallied up to this monthly point of control, we failed there, and now we just retested the monthly value area low. And if we get some good headlines, you know, maybe we just move from here. These H patterns are really interesting. A lot of times, like, people think like, oh, this is the area to short, you know, if we break below 4309. But the H pattern has a funny way of actually resolving to the upside. And a lot of times, this is the real kicker. A lot of times what will happen is the prior low will be undercut and everybody goes, all right, I gotta stop out. The pattern just broke, it's going down. And that'll be the exact point at which the big money starts buying everything. So I do think they like to suck in as much liquidity as they can. And by liquidity, you're bringing in more sellers in order to do your buying. And you're bringing in sellers that are desperate as well. So yeah, is there a chance that we undercut some of these lows in the next coming weeks? Absolutely. So it's important to just be cognizant of that. And yeah, I think that's why, given the heightened level of uncertainty, it is good to carry a bigger cash balance. NASDAQ was down 1.21%, same exact thing, this H pattern. Russell fell below this monthly point of control. So that is definitely noteworthy. We lost the 20-day moving average here. And the dogs of the Dow, they're also putting in the same H pattern. And the Dow Jones is starting to retest these lows. One thing that was noteworthy for today's session, definitely worth addressing. The Federal Reserve, everyone's been wondering, are they going to do one rate hike or are they going to do two? That's a big concern on everyone's mind. And everyone's gone back and forth, right? But now the probabilities are shifting towards just one rate hike for this next meeting in March. So let's pull that up. So you can see on this Fed Rate Monitor tool, we actually had a headline come out as well. Like, I forget who it was, one of these Fed speakers. They said, hey, we're leaning more towards one rate hike. So that is a bit of pressure coming off the market. You can see now there's only a 22.1% chance of 2 hikes in March. So it does look like the Fed is in damage control mode, where the last thing that they want is the indices down like 20 as they're starting to go ahead and hike rates and take away accommodation. Let's take a look at some of my trades for today. Let's see, what did we have going on today? So one that I did trade was Upstart. So this one is one that I want to build a position in. So I got long Upstart. This one, granted, this was a very early entry in hindsight. Got long at 9:33 a.m. Some Upstart common shares. And I put in a little note, gave myself room to add to this position. Because I was like, this thing is going to slide all around today. But I want to make sure I establish something because I'm seeing this as a pretty good opportunity for some of these growth stocks. Look at this. The ARK Innovation ETF. This is like a textbook H pattern. But remember, these ARK Innovation stocks, it seemed like, oh my gosh, they're going to slip into the abyss. Don't buy these. Then they rallied and suddenly everyone got interested in them as they advanced like 30 or 40% off the lows. Now we're getting a second shot here. We do, for this ARK Innovation ETF, have this VPOC down here at 60.18. We could certainly hit that. Another thing I noted was the ARK Innovation ETF, look at the IV percentile. It's 97.2. So the volatility is jacked and everyone is fearful about these growth stocks. People are just dumping them once again. So I looked at Upstart. Upstart reported a stellar quarter. It was awesome. They beat on sales and earnings. They also announced a buyback, which is just fantastic. And this one has a great storied history of having fantastic runs after earnings reports. So I noticed over the past 2 days, ARK has just fallen off a cliff. And in my opinion, it's taken Upstart with it, even though it just reported awesome earnings. So Upstart is very highly correlated with ARK, even though I don't believe Cathie Wood owns Upstart, which is a good thing. So a lot of people just target her stocks. But yeah, Upstart, I took this as an opportunity. I added some common shares and used a bit of my cash balance to position here. I added my position, and then this thing really just plummeted throughout the day. And I was glad I gave myself some room to add. I was certainly not expecting down like 6.86%, but I was able to add to that position as we were quite literally on the lows for the day. So I was like, I'm taking advantage of this. I got long these March 18th 120 calls for 1925. These are already marking at a small winner. So yeah, Upstart, my thinking here is, let's say we get a bounce in these ARK stocks. You know, they always bounce pretty hard. Whatever happens, let's say just one trading session ago, we were trading as high as 157.21. If Upstart were to get back to that level, which is not that far-fetched, to be honest, this one has great runs. And when these growth stocks are moving, which one of these is going to lead? Most likely the one that reported stellar earnings. If we were to get back to that same level, my calls that I purchased for 1925 will have an intrinsic value of 37 bucks, which is pretty fantastic. So for me, I was like, this is definitely worth a shot. So I took a shot, used some of my cash balance. And I think that's, I think there's two ways to approach this downtrending market. I think one is just don't trade it at all when it's downtrending and really just sit on the sidelines. And then I think the other way of approaching it is make sure you have a cash balance and pick your spots if you want to take a long entry. And for me, like with these growth stocks, this just seemed like one of those spots where if we don't enter World War III, you never know. We could have a nice bounce in these names. So that was my main focus, just Upstart. I was watching that for most of this session. And then SoFi, I also added a position. SoFi, I really like this company. And they have not reported earnings yet. So maybe we get a run into the print. But this one as well, forming that H pattern, now trading towards the lows. So yeah, if you loved SoFi at 13.5, you should love it here at 11.39. So yeah, those were my only trades for today. I was like, let me take advantage of some of this growth stock weakness. But other than that, I was just watching. I didn't do like any day trading or, trying to gamify the OPEX Friday. Because I know like OPEX Friday, is undefeated. You know, it makes for a very tough trading environment. There's not much like trending action. It's a lot of options players just adjusting their positions. So yeah, it can make for a difficult trading day. So I just tried to limit my actions. Let's take a look here at our VigTech options matrix. And let's just note all these put options that were bought. So we had a ton of SPY puts going up. Oh, that is SPY again, excuse me. We had mostly Tesla puts going up. Qs, a ton of puts. So we had what I like to call panic puts being bought. Nvidia, mixture, but mostly puts as well. So of course, as the market really starts to plummet, that's when these fund managers, you know, a lot of times they get off sides and they are forced to buy the puts. So I was like, you know what, I'm going to take advantage and add a few positions. Yeah, I think very prudent. Make sure you live to fight another day in this market. Carry a cash balance. And throughout the weekend, I'm actually going to start this, you know, once I finish recording this video, I'm going to be putting out my weekend market analysis for all Pristine Capital members. And we're going to go through credit spreads. We're going to go through the dark pool model. We're going to go through a bunch of sentiment indicators, you know, just a much deeper weekend analysis. So if you're interested, go to pristinecapital.net. Feel free to sign up for that. With that being said, that about does it for this market recap video. Hope you all were able to weather this storm this week. Definitely get some R&R, get some time with the fam, some good food in your stomach, and we are going to hit it next week. Thank you so much, everyone. Have a good weekend.